Let us start by learning how to identify and separate lease components and non-lease components within a contract. From the perspective of the lessee, the right to use an underlying asset in a lease agreement is considered a separate lease component, if both of the following conditions are met. First, the lessee can benefit from the use of the underlying asset, either on its own, or together with other resources that are readily available to the lessee. Second, the underlying asset is neither highly dependent on, nor highly interrelated with the other underlying assets in the contract. If one of these two criteria is not met, then the right to use the underlying asset is not a separate lease component. The first criterion focuses on whether the lessee can realize benefits from the use of the underlying asset. Whether the lessee uses the underlying asset on its own or together with other resources, that depends on the characteristics of the underlying asset itself. The important point here is that the lessee should be able to realize the benefit from the asset. An example of an asset that can be used on its own is a lease agreement where a lessee leases a vehicle from a lessor. The lessee can derive benefits from using the leased vehicle on its own. Another example of an asset that is used in conjunction with other readily available resources is a lease agreement where the lessee leases an electric driller from a lessor. The lessee has already obtained the required screws for the driller from the market. Here, the lessee cannot use the electric driller on its own. It can be used only in conjunction with other resources, which are the screws required for the operation of the driller. But note here that these resources should be readily available to the lessee. Resources are readily available when they are sold or leased separately from the lessor or other suppliers, or when the lessee has already obtained them from the lessor or from other transactions and events, which is the case here in this example, as it is mentioned that the lessee has already obtained the required screws from other suppliers in the market. Now, let us move to the second criterion. In our previous example about the leased vehicle, assume that the lease contract included other underlying leased assets in addition to the leased vehicle, like for example a forklift. The second criterion examines whether the lessee's ability to derive benefits from the leased vehicle is significantly affected by other leased assets in the contract, the forklift. The second criterion states that the leased asset should be neither highly dependent on, nor highly interrelated with the other assets in the contract. In our example, the lessee can still use the leased vehicle despite the existence of the forklift. The leased vehicle is neither highly dependent on, nor highly interrelated with the leased forklift. In other words, if the lessee chose not to lease the forklift, the lessee could still benefit from using the leased vehicle, and that satisfies the second condition. So, in our leased vehicle example, both the first and second criteria were met. The lessee can benefit from the leased vehicle, and the leased vehicle is neither highly dependent on, nor highly interrelated with the leased forklift. Therefore, the leased vehicle is considered a single lease component under IFRS 16. Now, assume that the lease agreement stated that in addition to the leased vehicle and forklift, the lessor shall provide maintenance and security for these leased assets. These services are not lease transactions. They are non-lease components that should be accounted for using the applicable standards and not IFRS 16. These are the two criteria that lessees should consider when identifying and separating lease and non-lease components within the lease agreement. Now let us try an example. ABC Confectionery Company, the lessee, signed a lease agreement with XYZ Assets Company, the lessor, to lease the following units in a building that the lessor owns. First, a showroom to be used by the lessee for selling its own products from sweets, pastries, cakes and baked products. Second, a kitchen area that will include the lessee's production equipment needed to produce its own products. Third, an apartment in the same building, to be used as head office for the lessee's operations everywhere in the country. In addition, The lessor shall provide security and maintenance services during the contract term. Identify and separate lease and non-lease components. Let us apply the two separation criteria. First, the lessee can benefit from using each of the showroom, the kitchen, and the apartment. The showroom is used in selling the lessee's products. The kitchen is used in producing these products. The leased apartment is used by the lessee in managing its business everywhere around the country. Therefore, the lessee can obtain benefits from each of these components, and that satisfies the first criterion. Now for the second criterion. The question is, are the leased assets in the lease agreement highly dependent or highly interrelated? Let's see. If the lessee decided not to lease the kitchen, this decision for sure will affect the lessee's ability to derive any benefits from the showroom, because without the kitchen, the lessee cannot produce, and will have nothing to sell through the showroom, which renders the showroom useless. Also without the showroom, the lessee won't be able to sell its production from the kitchen. So, we can say that the lessee's ability to benefit from the showroom is significantly affected by its decision of whether to lease the kitchen, and vice versa. Based on that, we can conclude that both the showroom and the kitchen are highly dependent and highly interrelated, a case which does not satisfy the second criterion for both of them. As for the leased apartment, it is not highly dependent or highly interrelated with either the showroom or the kitchen. If the lessee decided not to lease the showroom or the kitchen, the lessee could still use the apartment to run its business in other locations in the country. So, to recap, the first criterion was satisfied for all the leased units in the contract. The second criterion is satisfied only for the apartment, and therefore, the showroom and the kitchen, each cannot be accounted for as a single lease component. Instead, they should be treated together as one lease component under IFRS 16. Only the leased apartment can be treated as a single lease component under IFRS 16, because both separation criteria were satisfied for it. Finally, the security and the maintenance services are not lease transactions. They are non-lease components that should be accounted for, using the applicable standards. The previous discussion about separating lease components and non-lease components was from the perspective of the lessee. Now, what about the lessor? Here, IFRS 16 referred the lessor to IFRS 15 in identifying lease and non-lease components within the contract. If you look in IFRS 15, you will find that the guidance the lessor should follow is almost similar to the lessee's guidance here in IFRS 16. Under IFRS 15, lessor should identify performance obligations that are distinct within the contract. Two conditions should be met for that. First, the customer can benefit from the promised good or service, either on its own, or together with other resources that are readily available to the customer. Second, the entity's promise to transfer the good or service to the lessee is separately identifiable from other promises in the contract. The standard mentioned that one of the factors that indicates that two or more promises are separately identifiable is that the goods or services are not highly interdependent or highly interrelated. We will not get too far talking about IFRS 15, as it is beyond the scope of this course, but we only mentioned that, to show that the guidance for identifying lease and non-lease components is almost the same for lessees and lessors. Once the lessor identifies lease and non-lease components, the lessor should account for the lease components using IFRS 16 as we shall see later in the course, and should account for the non-lease components using the applicable IFRS standards. Now, after identifying the lease and non-lease components in the contract, the next step is to allocate the contract consideration over these components. So, please check the following lecture.